I mentioned the lever being, or the lever being, the new branding for the Daily Poster. We have a piece by them about Wall Street here. This is by Matthew Cunningham Cook. Wall Street may reap billions from New York Dems reversal. City Comptroller Brad Lander, pledged to disentangle retirement funds from risky private equity and fossil fuel investments, but now he's pushing to do the opposite. As the Biden administration warns that workers' retirement funds may be getting fleeced by hedge funds and private equity firms, a top Democrat is reversing his own criticism of such investments and requesting authority to funnel billions of dollars of retiree savings to the private equity moguls. If that happens, it could mean $500 million of additional annual fees for a private equity industry that has produced some of the wealthiest people on the planet. The push from New York City Comptroller Brad Lander, which is tied to the state budget's impending April 1st deadline, comes as the pension system's existing alternative investments have delivered what critics say are subpar returns for retirees. It also comes as a recent report from littlesis.org and the Private Equity Stakeholder Project shows that 8 of the big private equity firms in which New York City's pension fund has stakes are deeply invested in the fossil fuel sector, a sector that Lander has pledged to specifically divest from in his role as custodian of all 5 New York City pension funds. Bloomberg reported last year that Lander said he recently sat down with BlackRock Inc. Vice Chairman Matt Mallow to talk about how 3 of the city's pension funds can actively divest from fossil fuels in both public funds as well as private equity and hedge fund investments. But now Lander seems to be doing the opposite, frustrating those who believe the city's pension funds had been moving in the right direction in terms of responsible investments. As Nate Franco, a 10-year member of the Main City Pension Fund, the New York City Employees Retirement System, told The Lever, "My concern is that we've taken a stand against fossil fuel investment, so increasing investment in private equity might lead us back into that realm indirectly." Again, they go on quite a bit more than I just wanted to bring you guys the details here, but Wall Street once again reaping profits off of nefarious industries and sort of justifying it with, well, it's just everyday people's retirement funds, right? And we have another bit here about Wall Street. Figure I could connect these two stories in a way. This is a little bit more of an insider trading kind of a situation. This was reported in the Wall Street Journal. You all will be shocked. No, I do not subscribe to the Wall Street Journal and therefore could not bring you the article. So I'm actually going to bring you a clip from Breaking Point's Crystal and Sagar going over some of these details. This is the start of their segment on this story. We'll come back and discuss.
Break down for you a blockbuster new Wall Street Journal report seeming to indicate one more way that the stock market may be rigged and may be gamed. Let's go ahead and throw this tear sheet up on the screen. The headline here says, big stock sales are supposed to be secret. The numbers indicate they are not. Share prices fall ahead of 58% of large sales, a Wall Street Journal analysis finds. And let me just read to you the beginning of this piece. They say, for years, something strange kept happening on Wall Street. Before a big shareholder could carry out plans to sell a slug of stock, the price dropped. It was as if other investors knew what was coming. These transactions, known as block trades, are supposed to be a secret between the selling shareholders and the investment banks they hire to execute the trades. But a Wall Street Journal analysis of nearly 400 such trades over 3 years indicates that information about the sales routinely leaks out ahead of time, a potentially illegal practice that costs those sellers millions of dollars and benefits banks and their hedge fund clients. So basically the allegation here is that when you have a large holder of these shares and they're about to get rid of them, they contract with investment banks to execute those trades, which are called block trades. Now, it's supposed to be a secret because obviously if you know that this big trade is coming, then you can front run it and get ahead of it, and you can sell off before they have an opportunity to and lock in a higher price. By doing that, you're of course driving the price down and making it so that their position is worse off by the time that these trades actually execute. And so what the Wall Street Journal found is sort of by an indirect analysis, they saw that routinely in 58% of the trades, the price would drop just before the trade hit. So the insinuation here, which is being investigated, by the way, by federal investigators, is that they are tipping off favored clients to get ahead of the curve. And by the way, oftentimes the people who are executing, who are involved in these block trades, a lot of times we're talking about pension funds. We're talking about, the retirement savings of teachers and firefighters, et cetera. But even if it's, a more nefarious as somebody that isn't so sympathetic, this is just straight up cheating.
Yeah, and so what they point to on this investigation is on Morgan Stanley, the big bank which dominates block trading. The firm disclosed in February it has been responding to information requests from the Department of Justice since the summer, and in November had to put one of its senior executives in charge of block trading on leave. So they refused to say why he was put on leave, but DOJ is investigating, and now the guy is no longer there. Goldman Sachs has already been probed, and the journal's analysis found that when Morgan Stanley executed a block trade by itself, the median stock would trail its peers by 0.7 percentage points in the trading session leading up to the deal, meaning half performed worse than that. That was the worst record of any of the big banks that are major players in block trading. The median for Credit Suisse was 0.4, and the median for Goldman and Barclays roughly matched the market. But across all banks, it still lags by 0.2%. So if you put that all together, it's very clear that something is happening. And look, I'm just a guy from the outside who reads, but the very basics of a Wall Street movie or any of these other fictions, which are obviously based within some deeper truths, is when you have access to inside information, if you could trade on that inside information, it's worth a whole lot of money. One of the best books I've ever read is Den of Thieves by, I think it's James Stewart, about the 1980s, Michael Milken, inside trading and all that. And this stuff was truly crazy. They'd be like, oh, I heard so-and-so is about to do this. They had these guys called arbs who would arbitrage on different trades and would trade on inside information. They're making millions of dollars. You know, guys who were in the investment banking side giving tip-offs to the sell side of what exactly was happening, or sorry, research side and sell side. Truly, look, a lot has obviously changed since 1987, but I think that that's baked into the culture of Wall Street. I mean, and that's something that it's obviously happening. I mean, it's obviously happening. The only question is how.
Yeah, I mean, you've seen this so many times.
So, you know, this is just how things go in Wall Street and amongst the financial elite. You guys, they have access to information. They utilize that access. And, you know, I will be stunned if anything actually comes of this investigation, because they are often kind of inundated from any sort of accountability in that regard. But it certainly seems like a trend was found there by the Wall Street Journal that is pretty hard to refute. And as Crystal mentioned, this is cheating, even if it's cheating against another financial mogul or giant, right? Like it's cheating either way. That's particularly egregious. But in either case, it's insider trading. And, you know, we have two tiers to our legal system here, you guys. If you commit these kinds of white collar crimes, you typically get away with it, and you have the resources to get away with it and hire the high power attorneys and all that kind of shit. So, you know, surprisingly good journalism there from the Wall Street Journal, and some actual investigative journalism holding the powerful accountable. Kind of rare from that outlet, in my opinion.